Hi guys, so I'm just going to do a quick snippet on another point which really resonates with me, which is how to value an asset. Now, the way you value an asset generally tends to be quite confusing. People tend to think that the value of an asset is based on how much someone's willing to sell it for. No. The value of an asset, and this is a fundamental rule, is based on this one rule: how much cash the asset generates. I know you're probably thinking to yourself, what are you talking about? That is how you value an asset. How much cash it generates. That's what determines the value of an asset. And so what I generally tend to realize is that a lot of assets are massively overvalued. And here's an example. Here's an example of an asset. Let's say, for example, you want to buy a house, and there's two houses available. There's one house that's £200,000 and there's another house that's £100,000. The £200,000 house, let's say, rents out for 10 grand a year, while the £100,000 house rents out for 15 grand a year. So when you look at the grand scheme of things, to me, that £200,000 house is overvalued. It is massively overvalued. However, the £100,000 house is massively undervalued in relation to the £200,000 house. Not in relation to the overall market, but in relation to the £200,000 house. So what people generally tend to do is that they buy the £200,000 house believing that that's the value because someone's willing to sell it for that amount. They don't want to go below that amount. That's what they're willing to sell it for. But to an investor such as me, I wouldn't buy the house for £200,000. I think the house is overvalued. I think the house is way less. So I would prefer to go for the house that's £100,000 that rents out for 15 grand a year, because I'm making the most income per pound of my investment. That asset generates more cash in relation to its relative value. So the principle of it is that don't value an asset or a house or any other type of asset based on what someone's willing to sell it for. Value it based on how much income it generates. That determines the fundamental value. And so what you realize is when you buy that £100,000 house, someone will see that that house is worth a lot more when compared to the £200,000 house. So what will they do? They'll offer you more for it. So I hope that helps. It's just another quick snippet of how to invest for income. I'll be doing more videos and posts soon, but have a nice day. See you soon.